Now, this is going to be a lot of fun, Danny. We are going to talk about multi-bagger stocks. What is our theme? The exact theme. You came up with the idea, and I love it. The pursuit of multi-bagger stocks, right? The path to multi-bagger stocks.
The path to multi-bagger stocks. And what's really interesting to me about this is that I think a lot of people don't understand multi-baggers don't just happen.
No.
You know, everybody's got the dream of having a stock, buying it at the ground floor, and it takes them to untold riches. But there are a lot of things that happen in between. You know, and you and I have talked about this personally, but why don't you give us a few of the steps that happen that can get us to multi-baggers?
Yeah, so I'm gonna take us on a little adventure, Danny, if you're ready to go with me.
I'm ready.
Let's go back to August of 2013. August of 2013, I have to say, by what I'm about to share on the screen here, August of 2013, I was either the best stock picker in the world or I was the luckiest stock picker of the world. And I think, Danny, it's going to be a little bit of both. But what I want to talk about, so August of 2013, the following thing happened. I bought shares of Meritage Homes. So Meritage Homes has averaged just under 12% annualized returns over that period. Over that period, that's actually underperformed the S&P 500 for that same window. But over the long term, that's a good 20% better than the market's long-term average. Multi-baggers, 266%. What has that done? For every $1,000 that would have been, if I had invested $1,000 in that stock back then, I'd have $3,600 today, right? That's pretty good. Not a bad start. Not a bad start at all. Now, you know what? I did even better. I bought Trex and I bought Intuitive Surgical, all in that same month. So that 266% in returns is now dwarfed by what Intuitive Surgical and Trex have done over that period of time. Just enormous multi-bagger returns. Now, time to put the ego away, because that same week, I also made some investments in these three other stocks in that same month of August, down 75%, and then two that are down 90. One is down essentially 100%, 98.7% in returns. Now, I want to talk about just the pure power of the multi-bagger in your portfolio. Let's say I had invested $1,000 in each of those stocks. Let's just use that round number. Now, of course, those three bottom performers, I'd have, call it $275 left of $3,000 invested, $275. So basically lost 90% of my money. But then you look at the returns of these other stocks, and all of a sudden you've got $27,000 plus in gains. $6,000 investment, over $27,000 in gains. And that's with three of them losing 90% of your returns. Now, with that same period of time, I also bought Hain Celestial. Well, guess what? Didn't really do very well either. Hain, $1,000 turned into $144. But Starbucks and Chipotle, hey, those have done pretty good too. Maybe not incredibly good, but pretty good along the way. So here we go. All right, we got 11 stocks. Let's say you made $12,000, $1,000 invested in each one of those 11 stocks, $11,000 total. The two best performers alone, just one of those, they make everything free. All of the returns become free. That's the power, to me, Danny, of multi-bagger stocks. When you find these stocks and you buy them and you hold them for long periods of time, your losers, those painful losses, become so irrelevant because you concentrate, your winners become more and more relevant and valuable in what you own.